The way that we're going to structure this is I'm going to pass it over to Steve to kick us off. But we have a few areas that we want to focus on. Reminder on our strategy. We want to go through economics. We're going to have Ravi Kaza do that. An update on the public listing from Joel. Bitcoin mining business from Asher Janut. We'll talk about the Eth Staking Business with Noah, and then some additional opportunity areas. The way that we'll structure this is that we're going to have sort of an overview on these core topics, followed by Q&A on each. So questions can be submitted via the Q&A feature within the platform. So just at the bottom, you can type in a question. Don't raise your hand. We will never get through all of them. So we want to be efficient and consolidate questions as they come in. So please use that chat feature, and then we'll be trying to get through questions via each subject as we cover them and we have those people up. So Steve, I'll kick this over to you to get us going here today.
Great, thanks. Appreciate it. Well, and appreciate everyone's time today. We're excited to have an opportunity to share more about our plans for NewCo and also answer your questions. And we've seen some great questions coming in so far. Just to remind everybody, NewCo will be built on the foundation of two core business lines, one being Bitcoin mining and the other Ethereum staking. I think also important is that we have a team of seasoned crypto native operators that have a track record of financial discipline that we believe is best in class. And I think what's exciting for us today is that really it's an opportunity for you to both hear from the Fahrenheit principles more about how we think about the plan and how we're thinking about building shareholder value, but also ask questions about it. And, as Kelly mentioned, Ravi is going to spend some time on economics and I think more specifically, how we think about investing and capital efficiency. We've also asked Chris Ferrara to join to address liquid crypto distributions, which I know is there's a number of questions on that folks have, so you'll be able to hear from him on that. Joel will share more about our intention to publicly list NewCo stock and progress that's being made there. And I think also given that Bitcoin mining and Ethereum staking are so important, really having Asher to get into the details on how he's thinking about that and how we're approaching that, I think it'd be really useful for everyone, as well as Noah getting into Ethereum staking as well. And then, last but not least, one of the things we did want to spend a few minutes on at the end are additional business opportunities. One of the questions that we've heard very frequently is, what do we think about beyond Bitcoin mining or Ethereum staking? And so, we'll share a little bit more insight on that as well. But I think with that, I'll probably kick it over to Ravi. Ravi, maybe you can get things rolling for us.
Absolutely. Thanks, Steve. So to talk a little bit about plan economics, first, I want to contextualize the $450 million of liquid crypto that's planned to go from the estate to NewCo at the effective date of the transaction. So for context, in the orderly wind down, you have $50 million that's anticipated to go to fund the standalone mining business. And the orderly wind down transaction structure from a fee perspective is inefficient by slightly more than $100 million relative to the NewCo transaction. So when you net those numbers, as you'll see on page 12 of the disclosure statement, the total differential of liquid crypto distribution available to creditors as of the close of the transaction is lower by about $275 million in the NewCo transaction as compared to the orderly wind down. Now, for context, what you'll see on the slide above is that about $300 million, and this is a slide, by the way, that's in our presentation in the disclosure statement, what you'll see is that about $300 million in NewCo assets are anticipated to be illiquid as of the effective date. That's roughly a quarter of the assets within NewCo. Under the orderly wind down, these assets are estimated to take as much as 5 years to monetize. As a result of the NewCo transaction structure, which, as many of you are aware, contemplates a NASDAQ listing at closing, these assets, which are organically themselves illiquid and anticipated to be illiquid as of the closing date, will in effect become liquid, because the ownership that creditors have in these assets will be represented by their ownership in the NASDAQ listed equity. And so those investors that seek liquidity with respect to those assets will be able to capture it. Those that want to participate in the ongoing upside of them will be able to maintain their NewCo equity and do that as well. We remain committed to our strategy of achieving a NASDAQ listing for the new company at a time at or around the effective date, as we said in our past spaces. Fahrenheit and our council have had multiple calls with NASDAQ, and we remain convinced that that strategy is quite viable and remain quite comfortable with that forecast. Switching to the next slide, a point we want to highlight is that the NewCo plan is projected to not only deliver the highest recovery rates in totality, but also deliver the maximum amount of liquidity that's available to creditors on or around emergence. And again, that's heavily tied to the public listing that we anticipate achieving. We're additionally working with the UCC on additional strategies that could potentially increase the amount of available crypto for creditors who choose the liquid crypto weighted distribution election, often referred to as the toggle. And the goal there would be to make that more robust and provide investors that seek liquidity via the plan to have access to more of it. Again, those are things that we're working on, and hopefully we might be able to announce something in the future. Fahrenheit intends to have a broad outreach campaign or roadshow, if you like, with appropriate institutional investors in the weeks before the listing goes live on NASDAQ. We're exploring all available options for creating additional liquidity in the secondary market at or around the listing date as well. So we're looking to both bolster the amount of liquidity potentially available as part of the plan, and we're also exploring options around increasing liquidity when the issue begins trading in the public markets. Now, I want to spend a few minutes talking about capital allocation and capital efficiency, which are concepts near and dear to our heart on the Fahrenheit team and certainly on the US Bitcoin team. From a Fahrenheit perspective, the ultimate goal of all NewCo business strategies is really to maximize capital efficiency. All of us are long-term believers in the upside potential of benchmark crypto assets such as Bitcoin and Ethereum. And we intend to be and will become meaningful holders of NewCo equity as a result of this transaction. So from my perspective, what that means is we're going to be quite hesitant to redeploy NewCo's opening day $450 million in liquid crypto assets unless we believe that that redeployment of capital will lead to a creation of more Bitcoin and ETH over time, adjusted for the risk relevant to the strategies that we look to deploy that capital in. And that, I think, is a key thing to understand how we think about capital efficiency and allocation. And we'll try and weave that throughout this presentation as we talk more in detail about some of the strategies. Now, I think it's important to note here that the Fahrenheit team and the NewCo management team will analyze and make recommendations as to propose strategies and capital allocation decisions, but ultimately such significant decisions would have to be approved by NewCo's board. NewCo's board, as I'm sure you're all aware, will be primarily independent, contemplated presently to have 5 members of the 7 appointed by the UCC, 2 members coming from Fahrenheit. That we think will provide the new company with appropriate checks and balances. These independent directors will, of course, regularly stand for election, as is typical in any public company, and it will ultimately be the shareholders who will be re-electing those directors with time. Now, I want to talk a little bit about relevant track records with respect to capital allocation, because I think that's very important to give context to the records of the various principles on this front. So I'm going to start a little bit with US Bitcoin, because mining is contemplated to be perhaps the largest use of capital in the near term. So US Bitcoin has been built over the last 3 years, starting with raising capital in late 2020, just under 3 years ago. And they've raised in their history about $110 million of total equity capital. And today they've turned that into a business that has $500 million of value, as demonstrated by the public markets based on the trading of Hut 8. As many of you might be aware, US Bitcoin Bitcoin is very close to merging with Hut 8 in a merger of equals transaction. Now, if we give context to what that return on capital looks like, what that means is for any investor that invested in any of the capital raises that US Bitcoin has done since their inception, they've significantly outperformed Bitcoin, Ethereum, the S&P 500, the NASDAQ, and frankly, I would suggest any relevant comparable asset that I can think to look at. And so I think they've done that because they've had very much an analytical focus on capital efficiency and discipline. And you'll hear Asher talk a lot about this when he goes into detail on some of the strategies and how they approach investment. And I'd also highlight that this period that we're talking about, the last 3 years, as many of you are aware, incorporates a large period of time that one could categorize as crypto winter. Now, I would also point out that when we talk to institutional investors, this record of capital discipline and capital efficiency, we believe, will matter. And it will resonate with investors as they look at the track record. Now, earlier I talked about illiquid assets. We're going to have Arrington Capital, of which I'm a limited partner and an advisor to. We're going to have Arrington Capital's advice on how to manage those illiquid crypto assets over time and maximize value. The track record of Arrington Capital, an SEC registered investment advisor, they've been around for more than 5 years now, running assets solely dedicated to the crypto space. During that period, they've substantially outperformed both Bitcoin and Ethereum net of fees. The theme, one of the conditions of the deal that was provided as part of the deal is that Arrington will share substantially all of their deal flow with the new company. Now, I want to give context to this. Whether the new company will choose to be a significant investor in future venture rounds and venture investments is an option, not an obligation. So it's an option provided to the company to have access to the deal flow and the ability to participate in deals to the extent that the NewCo board decides to allocate significant amounts of capital for that. I think throughout this presentation, you're going to see that there are many elements of optionality built into the NewCo plan. And I'd like to again highlight that options are just that. They're options, they're not obligations. Now, I want to make some comments about the mining strategy at a high level. I think there's 3 elements to the mining strategy that are important from an economic and business perspective. One is a strategy of building proprietary sites that will be owned completely by NewCo's shareholders. The goal here is to significantly increase the mix over time of machines that are run on sites within NewCo's ownership and not within third-party owned sites. US Bitcoin has made commitments with respect to the cost and timing in building these sites, and they're part of the plan. And there are financial penalties to the extent that they're not able to make these commitments. Being well capitalized will allow NewCo to potentially make quite opportunistic site acquisitions. And hopefully we'll be able to talk about some of these in the weeks ahead that are underway. The key focus is finding opportunities that have high IRRs and short payback periods and allow the business to internalize the management of mining equipment and own more of the ultimate Bitcoin that comes from these machines over time through the strategy of vertical integration. Second big tenet of the strategy is refreshing the fleet opportunistically. And in order to do that and do it in a capital efficient way, we've put forth several options. One is a strategic ASIC partnership. Another is a coupon deal. Both of these are with 2 of the 3 largest ASIC manufacturers within the Bitcoin mining space. At the present time, the ASIC partnership appears to us to be the most capital efficient way to refresh and grow the fleet relative to an outright purchase of machines. Now, that could very well change over time. So the key here is, again, these are options, and the management and the board of the new company will constantly evaluate which options to refresh the fleet are more capital efficient and pursue those in the appropriate mix. Last point on mining is the goal over time is to grow both total hash rate and the share of the Bitcoin network that NewCo accounts for. From a capital markets perspective, we're going to be targeting heavily growth investors. Growth investors tend to like to invest in companies that are in high growth markets and that are gaining share. But the key here is growth while maintaining capital efficiency and capital discipline. Growth for the sake of growth while sacrificing capital efficiency tends to lead to bad things, especially in high growth markets, if one studies the history of these types of markets. Asher will provide a lot of perspective later on with specific anecdotes and experience from US Bitcoin's history, where a lot of the conventional wisdom that you might hear on crypto Twitter or social media about how to run a mining business is not necessarily consistent with their experience in running a significant mining business at US Bitcoin. The last thing I'd highlight about US Bitcoin is the fleet that they manage today, 190,000 machines, is substantially larger than the anticipated Celsius fleet that's anticipated to be assumed at NewCo. So I've been very careful to observe the critiques and the comments about the transaction on social media. And I've heard terms like startup used to describe the effort. And so I just want to offer context and point out that the operators we're talking about have managed greater scale and greater build outs at scale than what is contemplated at NewCo at the beginning of the transaction. So we believe we have the right partners in place that have the experience and the track record to drive the type of strategy that we're talking about. Now, I'm going to make a few comments about the staking strategy. A question we often hear is something along the lines of, why would you be in the staking business? Why couldn't we just stake our own ETH? So let me address that. First, in the short term, let me talk a little bit about Proof Group and their track record, and then we'll talk about how the strategy might unfold both in the short term and then in the intermediate and longer term. Proof Group has substantial experience staking cryptocurrency worth hundreds of millions of dollars for its own clients. Now, their clients are primarily ultra high net worth family offices, venture capitalists, highly sophisticated investors who've done extensive due diligence about potential staking partners. As part of this transaction, Proof Group is contributing its IP to NewCo upon closing and will assist NewCo in growing and managing the infrastructure of its staking business. So what that means is NewCo will have a proven set of infrastructure that they will not have to pay fees on, which fees, and Noah will talk a little bit more detail about this. Fees can be meaningful in the staking business, and scale also matters. Scale and efficiency allow one to earn higher yields. And so when you compound those two effects, we think there's meaningful value capture to be had by NewCo relative to the staking economics that a distributed group of smaller investors could achieve on their own. So there's efficiencies of scale and the reduction of fees. Now, that's a short-term answer. Now, if we think going forward, our belief is that whether regulatory compliant staking solutions on a third-party basis will develop in the US or in international markets in the future, that's a little bit of an unknown. It's a question we can't answer. However, to the extent that they do, we believe that the combination of scale, a proven track record, and an SEC reporting public company will put the company in a competitively advantaged position to pursue those opportunities, and that there could be significant value creation down that path over time. Last area that I'm going to make some comments on with respect to fees. So first, I think it's important to point out that if we compare the fees in the transaction that we're looking at today, the NewCo transaction, and we compare those to the fees with the Stalking Horse transaction that was in place when we got involved in the auction process, as has been publicly stated, those fees have been reduced substantially to the tune of hundreds of millions of dollars. Now, we believe that both ourselves and in the context of the negotiation, the debtors and the UCC took a holistic approach in negotiating this transaction. I think it's fair to say there are elements of it that we're not necessarily particularly in love with from an economic perspective, and I'm sure the debtors and the UCC have similar offsetting points. But I think what we all collectively agreed upon is the totality of the transaction generated significant incremental value and reduced fees relative to the transaction that was in place prior to the auction. Now, to delve specifically into the fees and make a few comments about that, the mining management fee, which is $15 million per annum as contemplated presently, this is a fee that's a fixed fee. It will cover US Bitcoin's management of all of Newco's mining assets. That includes overseeing of construction projects this is consistent with the vertical integration strategy I spoke about. It includes caps with respect to cost at $395,000 per megawatt for the next 24 months. It includes specific time commitments as to how fast these construction projects will be completed. And what this allows in our mind is it positions Newco to rapidly grow its share of self-staking and do it in a capital efficient and rapid manner. From a US Bitcoin perspective, our belief and their belief is that the fixed fees represent a below market deal. But again, for context, the reason the deal makes economic sense to them is because they're a significant investor and owner in Fahrenheit, and therefore they will have significant equity ownership in the emerging new company. And key to, I think, all parties involved was incentive alignment. And so for all of us, the vast majority, as we see it, of our economic upside in this transaction will come from the material economic ownership we would have in the new company. And that was the key to aligning incentives with the creditors who become shareholders in the new company. Now, we believe that US Bitcoin would not offer this package on a standalone basis in the context of something that looked like an orderly wind down without the economic ownership represented by the Fahrenheit structure. The remaining part of the management fee will cover all of the efforts of the Fahrenheit principals and the Fahrenheit team members. It will also cover the costs of all typical senior management within the context of a public company. So here we're talking about people like the CEO, the CFO, the general counsel, et cetera. And it will also, as I alluded to earlier, cover all of the intellectual property and the no fee efforts around staking, which again, we think could generate significant value for the company. So with that, Kelly, if there are any additional questions from the chat in this area that we want to cover.
Yeah, we've got a few questions for you, Ravi, that have come in. Just while we have this screen up here, we've got one. What is the difference between the percentage of crypto returned if you toggle to zero equity versus the percentage of crypto returned in the OWD liquidation numbers?
In the orderly wind
down.
Okay, got it. So as I alluded to, the difference between crypto that people would receive upfront between the Newco transaction and the orderly wind down, it's about $275 million. On a percentage basis, it's a little bit over 6% based on petition date values. So the orderly wind down is about 6% higher. Now, in terms of the toggle feature, if an investor were to elect the toggle feature and elect for more crypto, and they were to be fully satisfied, their total recovery rate, and this is from memory, I'm not looking at the exact number, but it's in the order of magnitude of 60% would be roughly their total recovery. And that would be all liquid and all in crypto on day one, as opposed to the 67% number that you see for total recovery, which is based on the standard mix between crypto and Newco equity.
Okay, and then Ravi, there's a number of questions coming in around the price of crypto and distribution. So I'm going to read through a couple of these and then we can address these points. But questions from attendees here today. The price of crypto for distributions and for the weighted distribution election is determined 15 days before the effective date. Is the price of Newco equity fixed, or will it differ from the valuation of the disclosure statement since Bitcoin has fallen since the statement was published? And then I've got another, just let me make sure we've addressed everyone here. Is the distribution fixed according to the disclosure statement? what if crypto goes up or down? So I guess this is all about the changes in crypto prices versus the petition date. We've got a couple more along those same lines that are thematically similar.
Let me take the last one first, because I think it's really important, but I'm going to address all of them. And Kelly, keep me, if I miss anything, please highlight it. I'll make sure, because these are all very important questions. So first of all, with respect to the value changes of crypto prices between, let's say, May 31st, and the reason I say May 31st, I believe those were the prices used in the disclosure statement. I think they didn't update them because crypto prices had not moved a lot between May 31st. I know they've moved a lot in the past couple of weeks, past few days, but the disclosure statement was done before that move. So a key thing here, the way to think about this is petition date prices are used to determine the share of the total creditor estate that any given creditor owns. So once that percentage is locked in, if the value of crypto in dollar terms goes up for the overall estate because the price of liquid crypto goes up, all creditors benefit in dollar terms. I know there's a lot of perceptions that the recovery in crypto is fixed in dollar terms, and so that creditors might have this weird perverse incentive to root for crypto prices to go down. I've seen a lot of references to this on Twitter. That doesn't make sense to our understanding of the deal. The deal is pretty straightforward. The crypto that's remaining after all fees are paid is ultimately owned by the creditors. NewCo will be vested with $450 million of crypto fixed in dollar terms. So if the price of crypto goes up, that actually slightly reduces the amount of crypto in unit terms that go to NewCo, which increases the amount of coins available for creditors. And to be clear, Fahrenheit is not receiving any crypto. I've seen references and notions that Fahrenheit would somehow receive crypto or value if the price of crypto went up between now and the closing date. That's simply not true. The only assets that are the only crypto assets that are going anywhere outside to creditors and the stated reserves in the disclosure statement would be the $450 million going to NewCo. And with respect to the equity valuation and how that's calculated, our understanding is there will be a final valuation of NewCo's equity done around closing. The liquid crypto will be, by definition, worth what it's worth because it'll be $450 million at the closing date. The illiquid assets would potentially be revalued. There's a third-party valuation expert that's been in charge of that, and those valuations could change. And then our understanding would be the valuation of the mining business is being done by the financial advisors of the debtor. And our understanding is they would potentially revalue the mining business based on changing market conditions at closing. So potentially the value of NewCo equity, which is the sum total of those three components, could change.
Ravi, can you comment on distribution and payouts? For example, we have someone on who is in a jurisdiction where PayPal does not exist. They can't even open a PayPal account, and there are many creditors in the same boat. Is there any updates there, Ravi? I'm not sure if that's you or Chris Ferrara.
I think we should probably have Chris take that one on the distribution mechanics, because NewCo is not going to be involved in those distribution mechanics.
Yeah, so let me go quickly through kind of an update on distribution. I'll be brief. Thanks, Ravi, and hello to everybody. On or shortly after the effective date, we will begin to distribute BTC and ETH. The amount of liquid crypto that's available for the distribution is approximately $2 billion at emergence, based upon BTC price of around 30,000 at the disclosure statement, so slightly lower in the current market backdrop. The initial distribution will be subject to applicable reserves and inclusive of the administrative claims. PayPal has been selected as the distribution agent for individual non-corporate creditors in the United States and Hawaii. For all distributions not made by PayPal, we will continue to explore potential options. If we do not identify a distribution agent, the Celsius platform is expected to remain open for 90 days after the effective date to make the distributions to non-US creditors through the Celsius app, similar to custody and withhold users. After 90 days, those creditors may receive fiat currency. So it's important that creditors come and take their crypto off the platform in that 90-day window. The 90-day window was selected based upon our experience with the custody and withhold account withdrawals. Our data showed that the vast majority of the value was withdrawn in that time frame. We'll provide additional information regarding distributions and the potential distribution agents as those contracts are finalized. And one last note, Kelly, while I'm here on KYC, in preparation for these distributions, we have initiated the update of the KYC data for our users. The process started about a month ago, and we will streamline, and this will streamline withdrawals by reducing the queues. Please remember that these requests will be received from the hello@Celsius email address, and importantly, only to provide the requested information via the Celsius app. Back to you guys.
Chris, one more follow-up that we've got incoming from regarding the PayPal distribution. PayPal has relatively low daily and weekly and monthly limits to withdrawal on crypto. Is anything being done about that you can comment on? And then also on sort of their fees associated with, so the fees and withdrawal limits. I've got a few questions on that front.
Okay, perfect. Let's start with the withdrawals. We are and have been for some time in communication with PayPal on increasing the withdrawal limits. They have leaned into this, and we think that this will be solved.
Okay, great. And for those attendees that are on here, I do see a number of questions regarding the stock and equity in that distribution. I'm going to have Joel take that because we're going to flip in a minute here to bring Joel up on sort of an update on public listing and what that means. So I'm seeing questions on that. We're going to take that in that section. One last question, Robbie, for you. Why is there a reference in the disclosure statement to Fahrenheit having a role in the financing on the litigation trust preference claims?
Yeah, so I'm going to make a direct answer there, and it's one that I believe we posted on Twitter. Fahrenheit Holdings has no interest in NewCo providing third-party financing for any litigation and has no plans or intentions for NewCo to do so. And to be clear, avoidance actions against account holders are not being transferred to NewCo under the plan. And just a little bit more context here. When we entered the auction, we were asked to not take a position on any of these issues. We followed that guidance, and we see no reason to change that posture. And so we don't view these as NewCo matters. And from our perspective, that's kind of our statement on that. We would not anticipate being involved in any way.
Okay. Thanks, Robbie. Thank you, Chris. I think in the interest of time, because I'm seeing some other questions, but I think some of these sections are going to address them. So just to be efficient with our time here, Joel, why don't we bring you up on an update on sort of the public listing audit and how that's going? I know you wanted to talk about these three buckets that we have on the slide right now.
Sure, thanks, Kelly, and I appreciate everyone attending today. So I think when we won the auction, literally the next day, we started to dig right in to figure out what is the path to go in public. And it all starts with accounting. So immediately we started launching audit prep and getting the last couple of years of historical financials in much better order. For those of you that read portions or all of the examiner's report, you can understand that there is a lot of work to do there. I can tell you that kind of as we gear towards the end of August, we've made a lot of headway, and I feel pretty confident in the progress we made to date. We're about to launch audits for 5 different periods. We're going to be doing 2020, 2021, and 2022 annual audits for the mining business historically. And then we're going to do unaudited quarterly interim reviews for the first 2 quarters of 2023. And those will form the basis for a lot of the financial statements that we're going to be presenting on our applications and forms with the SEC. The one thing I wanted to note is with my background coming over from US Bitcoin, I've been CFO there for the last 2 years. I'm very fluent in the financial statements and specifically the accounting needs and interests within Bitcoin mining and the broader crypto space. There's a lot of focus areas by the SEC and auditors that wouldn't be necessary potentially in other industries. And I've been working with them fluently over the last 2 years to prep all these pieces. As Robbie mentioned, and we'll come up a little bit later, I'm currently working through a merger with Hut 8 on the US Bitcoin side. I'm leading the S4 process, so very knowledgeable in terms of what the SEC needs, what the requirements are, and kind of their focus areas that they're paying attention to. Kelly, I know a couple of questions came in regarding board or board governance and setup on those things. Anything you want me to hit on in particular?
They're concerned about the appointment of board members. Can you address how that's happening? Just sort of the process, I think would be good. We've got a couple of questions broadly on board there. So I think just addressing it and how that'll be set up would be great, but that's it.
Perfect. So I'll hit it on in 1 second, but before I do, and I know Robbie mentioned, so we've had a number of calls with regulators and more specifically with NASDAQ. And we want to make sure that we are able to, as close to or on the effective date, our goal and aim is to go public. Everything from their side has been quite positive, and they understand the strategy that we're looking to pursue to get to that listing point. One of the things that we'll need as a public company is a board. And so currently it's contemplated that there'll be 7 board seats, 2 from the Fahrenheit side and 5 appointed by the UCC. The process is we're in the middle of the process, but one of the things that we're working through is to make sure that the members from the UCC side hit the independence qualifications, and we're working closely with them on that process. For those that aren't as familiar, I'll give an example. As a public company, we'll have an audit committee. So we'll need independent directors to serve on that committee, and we'll need an audit chair. People that are knowledgeable in understanding financial statements and the different regulations around those pieces. And the other thing I wanted to mention is we believe that there's a need, obviously, for open and transparent communication. We understand what has happened in the past, and we don't want to repeat those mistakes. All of you have been through extremely challenging time over the last year or two. And so one of the reasons why we're pursuing this public company option is to create good governance, strong communication, transparent filings of quarterly financials and annual financial statements. And one other note is any material events that would happen once we're a public company will typically be listed on a Form 8K with the SEC. So what we want to do on a go forward, be transparent and communicate with you in real time under regulation by the SEC and in compliance with the NASDAQ listing requirements.
Joel, a couple of questions coming in now. How will NewCo equity be transferred to our brokerage accounts? How long will that process take? And I think maybe even before that, there's just another timeline one. What is the detailed proposed timeline of a NASDAQ listing? Is there anything further you can say to that? And then how that equity will be transferred into brokerage accounts and timing on that?
Yeah, so I think for the timeline, and it's tough to predict an exact date, but we're doing our best to align it with the current process with the bankruptcy. So I know we're in the solicitation period, the voting period, then going to confirmation. In parallel, we're working through the audits, and we'll be working with the SEC to make sure that we can be compliant and listed on the NASDAQ as close to the effective date, if not on the effective date, as possible. At the same time, we've started to work through, and we're at our final 2 stages of picking a transfer agent. The transfer agent is kind of your record of shares. They keep the record of all the shareholders. And one of the big things that we've been taking into account is transfer agents that have a significant international presence. We recognize that a lot of new creditors are in the international landscape, and we want to make sure this process is as seamless and easy as possible to get shares to you. Once we select our transfer agent, and the one that we've narrowed in on is working with many of the largest companies in the United States that's listed, Fortune 500 companies, shareholders from all over the world. You'll be able to work with your broker or custodian in your local country and work with a transfer agent to get shares into your account. So it's something that we're very, very cognizant of and are working in real time to make a solution as seamless as possible.
And just to add one comment to what Joel said on the transfer agent, we're very cognizant of the fact that new company will have a lot of shareholders on day one, potentially 60,000, 80,000, 100,000. But for context, the transfer agent Joel was alluding to, they handle companies that have more than 1 million shareholders. So the amount of scale that we're talking about here is something that they're very much prepared to handle. These are companies that have shareholders, as Joel said, around the world. So we anticipate we're working with the right partners to help facilitate that.
Thank you both. That addressed a couple of questions around mechanics of receiving that stock. Thank you. I don't know if we can comment on this, but what are the tax implications of any of this?
I don't think we can say much more than what's in the disclosure statement with respect to tax, and certainly a lot of tax would be individual facts and circumstance.
If NewCo does receive its public listing on NASDAQ, are there plans to pay out a regularly scheduled dividend to shareholders?
That would be something that would be a board policy decision that the NewCo board
And Kelly, let me hit on that for a second. So I think one of the things that we've seen a lot of questions about, and I just want to clarify, is Fahrenheit's going to be a management team, and then myself and Steve and a number of people are going to be, managers of NewCo. We'll be making recommendations to the board and consulting with the board, but significant material decisions and actions will be decided upon board policy. Again, elected primarily 5 coming from the UCC and the creditor side, and 2 from Fahrenheit. So there'll be strong independence governance to make decisions like dividend policy, investment decisions, and large material bets.
Okay, two more areas of questions that have come from attendees today. Can you explain assumptions on valuations of NewCo stock as a multiple of NAV implied with the 67% total recovery? And then some other questions on how NewCo can be valued when it goes public. Many times when a company goes public, the shares dive right after. Can you speak to those 2 on valuation?
So in terms of how it's valued for disclosure statement purposes, the 3 components of NewCo primarily would be the mining business, which, as I alluded to earlier, there's a valuation that I believe was done by Centerview to set that valuation and the range. And I believe that the midpoint of that range was used. And the assumptions are in the disclosure statement. That would potentially be revalued, as I understand it, at closing to reflect then present market conditions. The liquid crypto of 450 million would be valued at 450 million. And then the illiquid assets, which, as I alluded to, were worth roughly $300 million. The third-party valuation expert may come up with a different valuation. The valuation of NewCo is the sum total of those 3 components, and that's what was included in calculating the recovery percentages. Now, with respect to how NewCo stock might trade in the public markets post-listing, that's obviously a fairly interesting question. It's obviously very much, given this sector we're talking about, a function of where crypto prices are and the risk appetite is for comparable equities. The thing, as we pointed out to, that we can do, that we believe can best optimize that valuation, given whatever the market conditions are, is to go out and have a broad roadshow-like effort, meeting with traditional institutional investors, educating them on the asset pool that we have as part of NewCo and the strategy that we're deploying to run those assets. And as I alluded to, that's what we'll be doing quite aggressively in the weeks ahead of the listing.
All right, thanks guys. Robbie and Joel, a couple more questions on tax that I don't think we can answer here. In the interest of time, we're going to move on and get Asher in here to talk about the Bitcoin mining business. So Asher, why don't we take you up and just tell me when you want to flip through some of these visuals here.
Yeah, wonderful. Thanks so much. So I think I've seen a lot of questions on Twitter ask, who is US Bitcoin? Is there information out there about them? So I want to spend a couple slides to run through who we are, to give everyone background and context, and then to run it through. So US Bitcoin is one of the largest operators of Bitcoin mining sites globally today. We have over 720 megawatts of assets under management. We have over 190,000 machines that we manage. And we partner with some of the largest institutions, both within crypto, like Anchorage and Bitmain, but also within the energy sector, like NextEra and Generate Capital. So we're very vertically integrated company and have expertise along the whole value chain. That's from designing and constructing data centers to third-party data center management. So we run data centers for third parties in addition to our own data centers. And then we also host machines for folks as well, both private and public companies. Kelly, you can flip to the next slide. So two examples of some of our partners. One is Generate Capital. They're a multi-billion-dollar clean energy fund, and they currently have 2 sites, total 400 megawatts. So we are a property manager for their facilities, and we run all of their infrastructure and all of their facilities from them, from managing the site on the ground to energy curtailment, ancillary services, bringing on customers, accounting, so on and so forth. And then the next one is NextEra Energy. They're one of the largest renewable energy companies that's publicly traded on the NASDAQ. We have a joint venture with them for 280 megawatts. It's a 50-50 joint venture. Actually, you can see behind me, this is one part of the facility. And so it's powered by renewables, and we're a partner to them as well. And we also manage the full project for them. Next slide, please. So this is quick background on our team. We have a lot of depth of knowledge across our team in all sectors, whether it be crypto, finance, energy, capital markets. And so we have a very deep bench, a lot of folks within the organization, and have a lot of expertise that we'll be bringing to the table. Next slide. And then before I jump and pivot into Celsius mining, one other thing as well is I know there have been questions regarding public information out there about US Bitcoin, financial, so on and so forth. As mentioned earlier by Ravi, we're going through a transaction right now with Hut 8. And so there is a publicly filed S4, that's a multi-100-page document that has all of our public finances that are out there as well. So for anyone that's interested, please feel free to go to the SEC's website. We'll have a lot of context on US Bitcoin, our background in financials. So pivoting now a bit to Celsius and Yuko. Kelly, if you can see on that same slide. One update that we wanted to give everybody is the company had chosen to sign a hosting agreement with the Alpha because we had given them an option in our bid to either purchase the site or be able to have the optionality to have a 5-year hosting agreement that we would host our machines. So that contract was signed. Rigs have already started shipping to site. About half of the rigs have already arrived on site and are already hashing, and then the rest are arriving in the next week or two. And so we'll look to have all of those machines energized and mining profitably for Celsius in the very near term. Next. I've seen a lot of questions regarding the mining fleet and the efficiency of the mining fleet. So we thought this would be helpful to show the different models between manufacturers. The 3 main manufacturers today are Bitmain, MicroBT, and Canaan, and to show you the different models between all 3 manufacturers and where they are in the efficiency curve. So as you can see, the majority of machines by Celsius are actually S19j Pros. And as you see here, they're in the higher range of efficiencies compared to all of the machines on the market today. So I think that's really important. The average fleet is 30 joules per terahash. And what's really important to note is when we think about mining, it's not binary, right? The reason why mining assets are so interesting is because it's an agile load that can work with the energy grid and can determine at what point in time do we mine Bitcoin because it's profitable, at what point in time do we sell energy because that's profitable. This summer has been extremely successful from an energy perspective in terms of revenue in the current Celsius fleet and across a lot of miners. And so when we run our machines and when we put software on all of the machines that we run for ourselves or for our partners, what we do is the software looks at what is the price of Bitcoin, what is hash price today, what are the energy prices, both in real time, day ahead, next day markets, and it makes a real time decision on a miner by miner basis on do we curtail this machine or do we not? But before making that binary decision, we also underclock machines to increase the efficiency. And so let me explain that kind of in layman's terms is if you have a car and you're driving a car at 100 miles per hour, your miles per gallon is probably reduced, right? The car is less efficient. But if you're driving the car at 40 or 50 miles per hour, you have a higher miles per gallon because you're driving the car more efficiently. So similar with miners, we can have that same threshold where we can basically overclock or underclock specific thresholds, and we can actually bring the efficiency of an S19j Pro from 30 joules per terahash to 25 joules per terahash, for example. And so that's really important is mining is not binary, especially at this scale. It's very nuanced and how do you approach the strategy with both energy and also the software you use to be able to manage the whole fleet. Kelly, next slide. One other question as well was the misconception that we saw regarding the most efficient machines are always the best. When we look at purchases for mining and for growth, I mean, really at the end of the day, mining is a very capital intensive business, right? It's a heavy CapEx business, just like energy infrastructure, just like oil and gas, so on and so forth. And so what you care about is not just your OpEx on a normalized basis, but you care about that depreciation, which is your initial CapEx. How much am I paying for these machines? How much am I paying for this infrastructure? And what's my payback time period? And if a new generation machine is significantly more expensive than the last generation, and therefore has a much longer payback, you might decide, hey, I'm going to buy not the newest, but the second to newest generation because I can get payback much quicker on my capital. And so every capital decision, you need to have a sensitivity analysis on hash pricing, on where you think the market's going to be, what your energy prices are. Energy prices are massive in driving profitability, especially when prices compress, and then make a decision on what type of efficiency of miner do we purchase. And so most recently, an example we gave and saw was that if you look at the retail markets, an S19XP is 30%, call it, more efficient than an S19J Pro, but it was almost double the price, right? And so you're gaining 30% efficiency, but you're also paying 100% the price. And so really thinking about those different variables when making decisions, because it's not just black or white. Next slide, please. So this is an analysis. The key goal with the Fahrenheit plan and US Bitcoin's assistance and help here is how do we vertically integrate the fleet? Today, a majority of Celsius miners are hosted with third parties. And with third parties, there are the costs that they charge you from a hosting rate. There's profit shares in some of those deals and so forth. And so goal is, how do we strengthen the partnerships we have with some key hosting partners and have great aligned terms and incentives, and then also be able to continue to grow and vertically integrate your own facility. So these numbers were kind of pulled with variables from the A&M model from the debtors that's in the disclosure statement, but it shows an illustrative 100 megawatts. So Celsius today is about 400 megawatts with 122,000 machines. And so this is an illustrative example of the cumulative cost savings for 100 megawatts across a 5-year period. So by year 5, for example, your cost of operating would be about $200 million rather than 350. So you're saving about 150 million by vertically integrating. So that is all the work that needs to be done in order to build and vertically integrate these facilities. And I think what's really important to note, and this came out during the auction process, is building sites at this scale is not easy. Many folks have tried, many folks have also failed. And so US Bitcoin coming with experience in operating large sites, we hope we'll be able to continue to drive. Kelly, I think you just switched. We'll be able to continue to drive value into the new company, and we'll continue to scale. While Kelly pulls up the slide, I can go through some of the Q&A questions that I see and maybe answer some of those questions for you all live.
Can you see that now, Asher?
I do not see anything. Yep, it's coming on right now. Perfect. We're back. So we can go to the next slide here, and then we can jump on Q&A afterwards. So wanted to dive a little bit deeper as well on the two manufacturers and basically the value that that they bring in the specific deals and structures. So the first is the strategic ASIC partnership. The strategic ASIC partnership, there's been a lot of questions I know regarding that. And the strategic ASIC partnership is basically the strategic ASIC partnership is really important because if you think about it, what it is it's a profit share model where you have a lot more capital efficiency. And so instead of just going and deploying all of your capital on buying rigs and building infrastructure, here we can deploy our capital on infrastructure and we get a split of the rigs. So example, if you look on the bottom left, you have year 1, year 2, and year 3. In year 1, if you deploy 180,000 rigs, you get the 30% of the rigs in year 1, that's 54,000 rigs. Then your ownership increases by 10% every year, where by the start of year 3, we'll own 90,000 rigs. The manufacturer will own 90,000 rigs. And we only have to build infrastructure and to host their infrastructure. So I'll go into more illustrative on that in the next slide. And then the second big opportunity and optionality that we put onto the table was the $100 million coupon from the manufacturer to drive and reduce our costs of mining. And that's really important. What these two things are are not a forced lever that NewCo has to execute and use. What it really is an option to be able to figure out at that moment in time when we're thinking about growing, what is the best way to grow and the most capital efficient way that drives the most shareholder value and creates the most return on capital invested. So Kelly, if you can go to the next slide, we'll jump a little deeper into the strategic ASIC partnership. So this is an illustrative example. Historically, when you look at miners and infrastructure, you're spending roughly, call it 67%, 2/3 of your capital buying miners versus about 1/3 of your capital building infrastructure. So on the left side, we kind of showed an example of if you spend $38 million, you put about 67% into miners, you'd own about 12,000 miners. That same example is if you put 12.5 million into that relative infrastructure in order to host those miners, that equates to about 38 megawatts. So in example 2 on the right side, it shows you what this capital would give you if you were to deploy it in the ASIC partnership. So instead of deploying money into miners, you don't have to deploy any capital into miners, and instead you're deploying the full $38 million into infrastructure. $38 million of infrastructure gets you roughly 117 megawatts. That's 3 times as much infrastructure as you had if you had to buy miners as well. And then by the end of year 2, the beginning of year 3, you also own half of the miners that are on that site. And half of those miners equates to 18,000 miners. So for the same $38 million, instead of owning just 12,000 machines and 38 megawatts of infrastructure, now you own 18,000 machines, you're hosting an additional 18,000 machines, and you own 117 megawatts of infrastructure. So this is a prime example of the strategies and the different types of partnerships and structures that we'll be implementing and driving in NewCo in order to drive shareholder value, in order to have the most capital efficient fleet and strategies across the mining sector and across the peers.
Asher, we're getting quite a few questions. Or do you want to keep going, or can I interject with a couple questions here?
Feel free.
How long does a build typically take? Have the locations been decided? Upstate New York, Texas? Is the land signed, lease, bought?
Yeah, so we have sites they're all under NDA, so I can't speak too detailed about them right now. We'll be releasing more information as they become publicly available and our partners allow so. But currently, if you think about a site from a straight greenfield site, our perspective is you can bring it online within about 6 months to get the first energization. And then from there, depending on the size of the facility, you continue to scale and energize basically on a weekly basis after that, right? There's long lead time items on things like substations and PMP transformers and things of that nature, but we have a very robust supply chain. And I think with our scale, that's really important. Noah brought this up in the auction, but it's kind of like the Costco model, right? With the scale we have more purchasing power. The suppliers will work harder to be able to get us materials quicker at a more competitive price. And so a lot of the supply chain bottlenecks, because we're constantly building, we own such a large fleet of miners, we're able to basically alleviate a lot of those concerns. And so our goal is to be able to bring facilities online within 6 months of when the executive team makes a decision to build. And so for full transparency, as you all know, Steve and Joel are going to be the executives in addition to an executive team. There's going to be a board of directors that are primarily appointed by the UCC, and US Bitcoin will operate based on the strategic decisions that they decide on how to allocate that capital.
Great, thanks, Asher. What public mining company do you view as most similar to NewCo's mining specifically? How are we going to be better than that? What do we need to improve on to surpass them? I guess market leadership, market dynamics.
Yeah, so if you think about scale, today, NewCo coming out will be one of the largest mining companies in the markets. And so today, Celsius Mining looks a bit more like Marathon, where they're hosting a lot of their machines with third parties. over time, that's going to evolve to look like a mix between Marathon and Riot, because there's going to be more vertical integration and more kind of control of the execution of those mining rigs. So those, I think, would be two strong public comps to look at.
A couple questions on halving here, Asher. I'm going to try and consolidate these. How about the impact of the Bitcoin halving with the rewards being cut in half? How is that going to impact Newco's profitability? Newco is going to have an older fleet heading into the halving. How are you prepared for efficiencies required to be profitable? New miners, fixed lower power contracts, grid efficiencies, hosting agreements. Can you kind of talk through all that?
Yeah, so as mentioned, mining is not a straight and narrow business where you buy a machine, you plug it in, and that's it. It's really an energy business. You're managing your electrons that fuel the miners. That's your largest cost of OpEx. And so you have to decide during what points of time are you mining, are you curtailing, are you sending energy back? So our goal is to take all of the knowledge that we've learned and try to drive the best recommendations on how to manage through the volatility. With a strong balance sheet, we'll also be able to deploy capital opportunistically if there's volatility in the markets and there are good assets to purchase or to invest into. And so really, as I mentioned earlier, mining is a CapEx intensive business. And usually where people deploy the CapEx is when the markets are running, where everything's super expensive, where a machine costs $10,000 a machine, $15,000 a machine, where in reality is you really should be building in the bear markets to capture all of the value and upside when the bull markets come. And so our goal is to take the knowledge that we've had in the scale and to be able to drive that growth through any type of volatility that comes, which obviously everyone here knows in crypto exists and will continue to exist.
Okay, and then Asher, I want to wrap this up. I know we're a little past the hour. We're going to go a little bit long here. I do want to make sure we have time for Noah and Steve to kind of tie off on some of those other core issues. Before we let go, Asher, US Bitcoin is merging with Hut 8. Disclose about that to complete both Hut 8 and what's going on with Celsius Newco. Can you talk about that?
Yeah, broke up a little bit, Kelly. So I think I heard the general gist of the question, so I'll answer it. I think the question was giving a bit more context on Hut 8 timing and relative to kind of Newco and Celsius. So
yes, thank you.
We've announced the Hut 8 transaction. We're currently working through the regulatory filings. Hut 8 will be having their shareholder vote soon as well. So all of that is public and out there. And so we'll go through the kind of proper steps for that process, both with SEC and the S4, and also with the Canadian regulators. In regards to Newco, really where we're acting, as I think Ravi brought up, is we are a partner on the mining side to operate and execute on the mining vision. And we're also an investor in Fahrenheit. And so really what we're working for here is the equity upside that Fahrenheit receives as our driver and incentive of really wanting to grow Newco and being a shareholder like all of you as well. And so I think from a timing perspective, really it's up to kind of the process and going through the proper regulatory channels, but we're working on both of them simultaneously in full steam.
Thank you, Asher. All right. Moving on, Noah, can we have you come up and talk a little bit about the ETH staking business?
Excited to do so. I think Ravi really covered a bunch of the key points, which is we're kind of going to be going into Newco with a significant owned and operated piece of infrastructure and IP. And I think that the kind of interesting thing here is it'll really be used to create more value for Newco to the extent that any new regulatory compliant staking opportunities develop. So on day one, and as I think has been proposed, very much this is about not getting diluted on this asset that we're going to have a material position in out of the gate. I think it's worth talking a little bit about the scale and the performance versus either independent or versus if you go to traditional vendors in the space. Just to rattle off a couple numbers, 5.6% last 7 days on our infrastructure, 5.5 the week before, 7.6 the week before. And on traditional vendors or in smaller scale, we're seeing gains that are probably 10 to 20% greater earnings based on not having to pay fees and the scale of having kind of a significant operation. So I think that's a really interesting thing. And then I think, you know, there's some questions around staking as a business. I guess what I would say, this is all kind of my personal opinion, is some folks have tried to offer consumer staking products with fixed return and messy things like that. We're saying something very simple, which is NewCo is going to have an asset. That asset is diluted if it is not put to work in the network. And we will be very, very well positioned with a company with a public balance sheet should regulatorily compliant staking opportunities arise in the future.
Questions on just trying to understand the BTC mining and ETH staking arms of NewCo meant for building value. Is it meant for value building, sending distributions, dividends to creditors, or both? Do we need to see real term gains dividends? Ravi or Joel?
Yeah,
or Noah,
I'm
not
happy.
sure.
I'm happy to take that. I think it will be the management team will certainly recommend, and the board will ultimately determine what the best capital allocation policy is. The goal will obviously be to create the maximum value for shareholders. If we look at the comparable companies, just to give context, a lot of growth equities, broadly speaking, tend not to pay dividends and tend to generate capital gains growth as their form of growth for shareholders. But that doesn't mean that a dividend would be off the table. It would ultimately be a board decision.
Okay. All right. Thanks, guys. I don't think it's any more specific to ETH staking. So let's move on. Steve, I know you wanted to cover some additional opportunity areas just to lay those out.
Yeah. And I guess I would preface this by just saying that, you know, one of the things that we've heard a lot of questions on are, you know, what are other areas to pursue around NewCo, or, you know, is Ethereum or is Bitcoin staking and Bitcoin mining and Ethereum staking, you know, kind of what's going to be done. And so I thought I would just raise here, in line with what Asher said around, you know, really thinking about when to be mining, when to curtail, and when to look at alternative opportunities. You know, one of the things that, you know, we intend to look at along with the board are, you know, where are there strategic opportunities that are adjacent to work that we're already doing. And I think that AI is a very interesting example. One of the things that is required for AI is sort of specific chipsets. NVIDIA is the largest manufacturer of those today. And the workloads and the infrastructure required are very similar to the work that will be done for Bitcoin mining. And so one of the things that you know we want to look into at the board is, are there alternative revenue streams that we can generate using some of the infrastructure that we've built out for Bitcoin mining, and use that as a way to potentially enhance revenue and profitability over time. And I think everybody sees that there's a lot of interest out of the market in AI, but we think that this is, you know, a very strategic adjacent opportunity that we can potentially pursue, you know, as a first one. And then Kelly, you can advance. You know, and I think why, you know, do we think that this is an interesting adjacency? You know, I think what you can, you know, really look at is that, you know, because AI workloads are done on specialized gear, you know, a lot of the efficiencies that will have driven around energy costs, cooling and connectivity are exactly the sort of thing that we'll need there as well, and that there may be economic advantages to doing it in the types of facilities that we build versus, you know, say AWS as an example. And so we think that, you know, this is the kind of opportunity that, you know, when Ravi has talked about capital allocation, we need to be looking at very carefully, as I think they could represent, you know, potentially interesting new avenues for us to pursue. And it's similar on the ETH staking side. You can advance, Kelly, is, I think one of the things that we've been looking at is restaking. And just to put that very simply, restaking is a way to leverage staked ETH to provide security to new protocols. And one of the things that one of the opportunities that affords is more venture style potential returns by earning rewards in some of the new protocols that are building around the Ethereum ecosystem, but doing so without having to deploy additional capital. Now, obviously, we want to be mindful of risk management and capital allocation. So we're not suggesting that this would represent an enormous position, something that we'd have to work closely with the board on. But we think there will be opportunities here, and these really are just two examples of the kinds of opportunities that we're going to be analyzing, every day and looking for as a way to continue to drive value to all the shareholders in NewCo. And I think really these will represent interesting opportunities to drive growth.
Great, thanks, Steve. I know
I was
there's
just
been a
going to say,
ton.
Kelly, if we want to wrap, I don't know if there's questions that we want to hit on here as
Yeah.
just in the end. We have a few minutes
Yeah,
left.
I'm trolling through. There's a few questions that are not necessarily for this group particular. So we'll see if we can get some others to answer those on social. We'll try and take some of the specifics that we haven't gotten to and answer those on Twitter as well. There's one interesting one here, Steve, that maybe we close out with. Say I pledge 100% of my claim for equity, but I'd like to get more equity in NewCo. Will there be a way for like-minded creditors to purchase the remaining equity share from those creditors who don't want to participate in NewCo, but want to get as close to as 1% of their dollarized crypto amount? I'm not sure if Steve or Robbie.
It's a great question, Robbie. Maybe you can hit on that one.
That's part of the so-called toggle set of elections that's built into the plan. So when people receive their ballots, hopefully in the coming days, they will be able to elect that they want to receive more NewCo equity. And I think that's entirely consistent with the spirit of the question, right? So if they elect that they want more NewCo equity, that's exactly what would happen. They would essentially receive more NewCo equity and less crypto. And that would be offset by investors making the offsetting election, i.e. who want more liquid crypto and less equity.
Great. All right, Steve, you want to close us out here?
Yeah, I just want to say thanks to everyone for taking time out of their day to hear more about our plans. We will be scheduling a couple of more of these over the next period, and that we will also try to follow up on Twitter. We've done our best to answer as many of the questions as we can, but we know we missed several of them, so we'll follow up on those. But thanks again, everyone, and hope this has been informative for everybody.